Hello friends, welcome to the BFM mini marathon of Module A. Okay, Module A. Now BFM, the paper is hardly how many next Sunday? Yeah. ABM was right. Those who had followed the marathon, I have seen the full marathons, mini marathons, all those which you have followed. I have seen that they have come up with bright colors. All of them have cleared it. So that's why you also follow the complete series of BFM mini marathons, A, B, C, D, then Maha Marathon. Follow all of them. Revisions, follow all of them. Don't miss even a single one. Okay? Today in mini marathon, I'll be covering all the numericals only. Focus is strictly on numericals because Forex numericals are very tough. So I'll be and good case studies, big case studies I will be taking. They are really tough. Okay? And you'll see them in those who have cleared the ABM paper. Don't be under the impression that BFM will also be as easy as ABM. And those who have not cleared, you also don't be under the pressure. Start afresh. It might happen ABM not cleared, BFM might be cleared. So start afresh. Don't let the ABM subject bother you in either ways. Okay? Share it with your friends. Like the video. Subscribe to the channel. Click on the bell icon. Don't miss this. Okay? See, first numerical only. It's the toughest one. So let's start. A customer request to book a forward contract for retirement of an import bill of USD 1 lakh. USD amount is 1 lakh. Due for payment on 15th September. See the due for payment on 15th September. It is from your Macmillan book. Huh? So due for payment on 15th September. Given spot rates are USD INR is 75.2729. Forward premium is given as spot June 10-12, July 28-23, August 30 to 34, September 43-45, August to September. Now this is a bit tricky part. August to September means 15 September. It is 6-7. So for that 15 days also the forward points are given. Plus one more point, check this. Charge margin of 0.2% on the spot rate. Kindly remember. Try to solve this problem. This is a sure problem in your exam. Be sure about it. You'll be definitely getting this numerical in the exam. It's a big 5 marks case study. Okay? So, let's start. Firstly, understand what is the case. Booking a forward contract for retirement of an import bill. Kindly note few points over here. First is import bill. Whenever you have import bill, you have to take the right side, this side. Number 1. Number 2, due for payment on 15th September. So it is in the mid of September, right? Then charge margin of 0.2% on the spot rate. Margin of 0.2%. Got it? So let's start. There are two twists in this problem. Two twists. Which are the two twists? Number one is margin is to be charged on the spot rate. This is first twist. Generally, in any numerical, we charge the margin on the end rate which we get. End rate. But here, the margin is to be charged on the spot rate. Number 1. Number 2 twist is August to 15 September forward rates are given. So when such thing is given, you cannot use buy low sell high concept over here. Whenever you have the exact rate, not to use buy low sell high. This is very, very, very important concept. Whenever you have an exact rate on certain date, any date, whenever you are having the exact rate, you should never ever use the buy low sell high concept. Never use it. Got it? So with keeping these two in mind, Let's move ahead. And always remember 6, 7 means what? There are two digits 06, 07. Now kindly note, we are focusing on import bill. So we'll be focusing everywhere on the right side, not the left side. See this. This is always buy, this is always sell. Okay? Have I written it somewhere? Let me show you. See, whenever you have like this side is always buy and this side is always sell. Okay? So now we are focusing on import. Import means sell. Import is always sell. Okay? And export is always buy. Export. Export is always buy. So now we are focusing on import. So we'll be focusing on sell part. So everywhere you'll have to look at is sell part. Right side, right side, right side. No left side. So what are the 3 points which we should focus? One is right side. Second is margin on spot. Third is this August to 15 September. So let's start now. Move ahead. Say this. Let's say this date is anything. We don't know the date. Let's take it 1st June. This transaction is happening when? Forward rate. This forward transaction is happening when? September 15th. So I have to book the rate for September 15th. Okay? I have to book the rate for September 15th. Now whenever I have to book the rate for September 15th, I'll have to see two parts. One is September 1, starting of the month and ending of the month. So September 1, starting of the month. That month, don't focus on any other month. If you want September 15th, focus on September start, September end. Okay? So here, September start, September end. Now what is the rate for September start? Now one thing you note, if you look at the rates given over here, see these rates. Spot of June is given, July is given, August is given and September is given. So I want now September 1 rate. September 1. So kindly note one point. Whenever you want beginning of any month, the rate is of the earlier month. Whenever you want beginning of any month, the rate is of the earlier month. Because when I say July rate, it means it's for the July end. When I say August rate, it means it is for the August end. When I say September rate, it means it is for the September end. Getting this? Okay, I'll ask you one question now. Suppose if I get a rate for November rate is given. So when will that November rate be applicable? At the beginning of November or at the end of November? Type in the comment section. Will it be at the beginning of November or will it be at the end of November? Where is it? Yes. Everyone, think over it. Just now I gave you the hint also. The whole idea I gave you. It is always at the end. Okay? End. Now one more question. Now suppose if I want, look at this only. Suppose if I want the rate for 1st of July. I want the rate for 1st of July. Which rate will I take? 1st of July. See this, June end is given, July end is given. But where is 1st of July? 1st of July will be earlier month. So June end will be equal to 1st of July rate. Pay attention everyone, very important part. June end will be equal to 1st of July rate. Okay? Now I'll ask you one question. I want the rate for September beginning. September beginning. So September beginning means what rate will it be? August end. Isn't it? August end. Look at it. September beginning. It will be August end. Right? So I'll take August end rate. What is August end rate? For that what I have to do? Let's write the forward points. What are the forward points? So forward points over here, August end rate is 30 to 34. What do you mean by 30 to 34? Right side sell is 34 points. So it is taken to be taken in 0.34. Now is this currency in premium or discount? See, whenever you have right side bigger, this 34, whenever you have right side bigger, see, I'll show you over here also. Whenever if you have right side bigger, right bigger, right, okay, right bigger, big, this is small, then you say the currency is in premium, okay, and whenever it's reverse, left side is bigger, right side is small, then you say the currency is in discount. What is the advantage and what is the use of premium and discount? Whenever you have the currency in premium, pay attention, whenever you have the currency in premium, you have to add it to the spot rate. See this, you will have to plus this, add it to the spot rate. Pay attention everyone, whenever you have the currency in premium, you will have to add it to the spot rate. Whenever you have the currency in discount, you have to subtract it from the spot rate. Very clear concept should be there in your mind. Okay? So now move on. With this, let's move on. So now look at it. August end rate I am having. What is the spot rate now? 75.29. How do you know the spot rate? See, it's given. USD spot is 75.2729. Okay. So take this 29. Why 27? Because 27 is for sale, for export, buy. I want sell now, import. So 75.29. Alright. So 75.29 plus 0.34. Why plus? Because just now I told you currency is in premium. So I'll be adding this 75.29 plus 0.34. Add these two. Add these to everyone. You must get this answer as 75.63. Do it practically also. Everyone do it yourself. In exam, if you have practice on the calci, it's very easy. If you don't have practice on the calci, very difficult. Try this everyone. Practice on the calci, everyone. So it is 75.63. Okay. Now there is the twist which I told you. The twist is they have given the rate from August end to September 15th. So this is given to you. So this is what 07, right? 0607. Say this 67. So take this 7. Why? Because we are focusing always on this sell side, import. So do it 07. Now what will I do for this 07? Add or subtract? Again look at it. Is the currency in premium or discount? Say this 67. Right side is bigger. If right side is bigger, what does it mean? It means the currency is in premium. So again I'll add it. Right? Clear? So I'll add this now. See this 75.63 plus 0.07 plus. So what will I do now? Plus 0.07. So 75.70. 75.70. So what have I done up till now? I have completed the forward rate point. Forward rate, whatever is that, I have completed it. But there is still something remaining. That was a twist, right? Margin. Generally, now let me clarify this point. Generally, whenever we calculate the TT margin, this TT margin, in this problem, what is it given? Say this over here. Margin is to be calculated on the spot rate. It's clearly mentioned. Generally, we don't do this thing. We don't do it. Generally. Okay? Generally, what do? We calculate it on this last rate, 75.70. Generally, we calculate it for 75.70. Whatever you have achieved at the end, TT margin will be calculated on that end rate. But in this problem, it's specifically mentioned. Calculate the TT margin on the spot. So this is a spot. So 20%, sorry, 0.2%, okay, into spot. 20% is a huge amount. So 0.2%, 0.2%, so 0.2 divided by 100. Okay. So 0.2 upon 100 into 75.29. Multiply this. You will be getting it as 0.15. 0.15. Everyone try this. Everyone should try this. Everyone must know this. How to solve it? All of you should try this. Okay? So, 0.15. Right? 0.15, got it? Now, what will you do with this 0.15? Will you add or subtract? Whenever you are selling anything, you have to add the TT margin. Whenever you are selling anything, you have to add the TT margin. Okay? Why add? While selling, why do we add? And while buying, we subtract it. Why do we add it while selling? Do you know? Okay, I'll give you a simple example. Suppose if you buy a fridge, a refrigerator at your home, you buy it from that showroom guy will send some vehicle, right, to your home. The showroom guy will send a vehicle to your home. Some vehicle will be there. So what will that showroom guy tell you? See, the cost of the fridge is, let's say, 35,000. This carting guy, logistics person will take from you around 500 rupees. So 35,000, this 500, he is adding it to it. Is he subtracting the carting charges? No, he is adding it. Why? Because he is selling. So always while selling, you will try to add whatever this expenses have been occurred. So this is an expense. Logic is simple in all the businesses. You do it refrigerator selling or you do it dollar selling. Expenses seller, the one who is selling it, will always try to add the expenses so that he doesn't have to bear it. If this is not added, then the TT expenses, the seller or the bank will have to bear it. Right? So that's why we always add it while selling. Now add it then. 75.70, you got this answer, plus 0.15. So it is 75.85. This much is the rate to be quoted to the customer. This much is the rate to be quoted to the customer for the import. Okay, for the import. So, suppose if I ask you what is the amount? What is the amount? I'll be this, it will come. So, it is 75.85 into $1 lakh. Why 1 lakh? Because see this. $1 lakh are over here. Retirement of a USD, 1 lakh. Okay? Got it, everyone? Clear? Clear, everyone? So now, let's move on. Let's go for the revision. Some important parts of the over here in this numerical. Let's go for the revision of those. What are the important parts? See this. I'll write it over here. Okay? Let me write it over here because you must know these. It shouldn't happen that you forget it later. You must know all these. Okay? Let me bring in a new slide. Okay? See this. So what are the important points? Let's cover those. Okay? First one. Whenever you have to export, you will always sell. Okay? And reverse, I won't write the reverse thing now. If export is sell, then obviously import is buy. Clear? Whenever you have to do the export, you have to sell. Number one. Number two, forward margin. Forward. Okay? For forward points. You should use buy low, sell high when you don't know the rates in between. Whenever you have to do in between month, use buy low, sell high. BLSH, I'll write it. Buy low, sell high. If it is on the first date or the last date, no buy low, sell high. Clear? Number three, same. Okay, I'll write under this only forward points. If your currency is in premium, then add the margin, add the forward margin, add. Okay, if your currency is in discount, then subtract. How it is in premium? How is it in premium? It will be in premium if the right side is bigger. That I told you. TT margin. Whenever you are selling, you should always add. Whenever you are buying, you should always subtract. Don't forget these basics. What is given? Spot rate is given as 35.6065. Forward for 1 month is given as 3500 and 3000. 2 month is 55 and 5. 3 month is 85 and 80. Transit period is given as 20 days. Exchange margin is given as 0.15%. Calculate the bill buying rate. It's a buying. Buying means export. Kindly note. Whenever you have a buying rate, kindly note it's an export transaction. Okay? Export. So now, how to solve a forex problem? Kindly note. While solving a forex problem, you have to focus on three aspects. One is buy and sell, whether it's buy or sell. Second is forward margin, and third is exchange margin or TT margin we call it. So it is always buy or sell. Kindly note these points. First is buy or sell. Second is forward margin. And third is exchange margin. Exchange margin. Okay? So kindly note these 3 points you must never ever forget in any forex problem. You must start in the same sequence only. Now the basics of forward margin and exchange margin, you must know this. What is the basic of forward margin? See, the basic of forward margin is if the currency is in premium, you will add the forward margin. If the currency is in discount, you will subtract it. Clear? Yeah. Earlier also I have cleared this. Basic of the exchange margin. Whenever you buy any currency, you will subtract it. Whenever you sell any currency, you will add it. This is the only basic. So you have to remember these basics. Okay? So now let's move on. What is given? Spot is given 35.6065. What is next? Forward is given 1 month, 2 month, 3 month. That's it. Transit period is given as 20 days. Now this is a real catch. This will decide what I have to take, whether I have to take 1 month or 2 month or 3 month. This will decide. So now, let's look at this. This is spot. Spot means today. Spot. Okay. Transit period is given as 20 days. So when I send the documents, it is taking 20 days. So 20 days, 20 days. Now, this 20 days will lie between what? 20 days will lie between what? 0. Spot means 0. And 20 will lie between 0 and 30. Why 30? Because we are focusing on 1 month. This is our target. 1 month or 2 month or 3 month. Month means 30 days. So, we are focusing on 0 to 30 days, 1 month. So, I'll lie somewhere over here 20 days, 20. Okay. So now my focus point should be spot rate and 1 month rate. This 2 month is of no use to me. This 3 month is of no use to me. Zero use for me. 2 month and 3 month, zero use. Got it? So, got it everyone? Clear this point? Spot and 1 month. Why? Because I'm only focusing on 20 days. This margin we'll see it later. First, let's solve first these steps. Buy or sell. First, it's already given buy. So, forget this sell. So, buy clear. Now, forward margin. Forward margin for this, we are doing this. What is the 1 month rate given? 35.30. So, what does this mean? Forward, this currency is in premium or discount? 35.30. Right side is lower. Whenever you have right side lower, the currency is in discount. Discount. Okay, currency is in discount. Discount means minus. Just now I told you minus. Currency is in discount. Okay. So which rate will I take? 35 or 30? Shall I take 35 or shall I take 30? I am buying. Buying means always left side. So 35 point. This 35 and 30, right? So I'll always take, this is always buy and this is always sell. Okay? So I'll take this rate now, 35. So I'll write it over here, 0.35. 35. Let's write it in points. And what is the spot rate? 35.6. 35.60. Spot is 35.60 and 1 month is 0.35, but that is minus, kindly note, because it is in discount. It is in discount. So, first find the rate. 35.60 minus 0.35. So, 35.25. Right? This is my new rate. 35.60 minus 0.25. So, 35.25. Right? Got it? Getting this everyone? 35.25. Now what have I to do? I am dealing in 20 days. Here I am dealing in. Whenever I am dealing in between, I'll have to use the concept of buy low, sell high. Buy low, sell high. Kindly remember, buy low, sell high. Okay, buy low, sell high. This is the concept you will be remembering. So you are doing what now? Are you buying or selling? You are buying. So forget this sell high. You will only focus on buy low. You will focus on the lower rate now. Which is the lower rate over here? Tell me. Which is the lower rate over here? Yes. Which is the lower rate over here? Lower rate. 35.60 or 25? It is 35.25. So this rate I will take. I will not take this rate now. 35.60 will be cancelled. Buy low. I will buying at a lower rate. So 35.25. Got it everyone? So now where have you come? In these three steps. First step is gone. Second step is gone. Forward margin. This answer is for the forward margin. Now what is remaining? Third, exchange margin. Now focus on the exchange margin. What is the exchange margin? 0.15%. This exchange margin you will always have to calculate on the last rate. Whatever you have got. Only if the problem says that calculate it on spot rate, then calculate it on spot rate. If the problem says. Otherwise don't. Okay? So, solve this now. For finding the exchange margin, what you have to do is exchange margin. Look at this. Exchange margin. Exchange margin, MRG, okay, equals to 0.15%. Kindly note, 0.15 upon 100. Upon 100 into, what is the latest rate? 35.25. 35.25. So what is the answer now? Do this everyone. 0.15 upon 100 into 35.25. Do this. 0.15 upon 100 into 35.25. So what are you getting? 0.052. Are you getting this? Everyone give me the answer. Are you getting it? 0.052. 8 is also there. Take only 2 points. Chalo. 0.052. 8 is also there. Leave that 8. So now, do we have a page? Yes, we are having the page. So now TT margin is, see this. What was my rate? Rate was 35.25. Rate 35.25. And what was that margin? TT margin equals to, it was 0.052. 0.052. You are doing a buy transaction, buy. You are buying it. For buying, what did I tell you? TT margin. TT margin is always minus. For buying, you will have to do the minus. So minus this. 35.25 minus 0.0525. Do it, everyone. So you must be getting it as 35.19. 35.19. So this is your latest answer and final answer. This is the rate quoted to the customer. This is the rate quoted to the customer. Got it, everyone? This will be the rate you will quote to the customer. That's why Forex numericals are difficult. It is step-by-step process. It's like this. What Netflix series is there? Every time new character comes in. First buy or sell, then forward margin, then this TT margin, then the complexity is in that. Right side, left side, bigger. Right? It's same as your Netflix series. Okay? Got it, everyone? 35.19. This is the final rate. Answer. This is your answer, because you are always asked in the exam, find the bill buying rate. That's it. Okay? Next. TT buying rate for inward payment of USD 2,50,000. If the interbank rate is 49.0002 and margin to be charged is 0.08%, find the rate to be applied and amount credited to the customer's account. Now, two things are asked over here. Rate and amount. Both are asked. In earlier problem, only rate was asked. Here, rate and amount, both are asked. What is given? TT buying rate for inward payment is this. If interbank rate is TT buying rate is given 49.0002. Amount is 2,50,000. Margin is 0.08. Now this margin means what margin? What is this margin? This margin means TT margin or exchange margin. See, both names are same. TT or exchange. TT margin or exchange margin, both names are same. Follow the same sequence again. Don't change the sequence. First, buy or sell. Buy or sell. First one. Second, forward. Forward margin. Third, TT margin or exchange margin. TT. Okay? These are the three steps. Everyone try this now. Try this. Let me see. How many of you can solve this? Let me see. Try this. First tell me, is it buy or sell? First tell me, is it buy or sell? Is it buy or sell? Inward payment. Inward. Whenever you are having inward payment means always buy. Whenever your currency is coming in, dollar is coming in, you will always buy it. Okay? So, inward means buy. So, you will cancel this sell now. So, you will be using buy rate now. Whenever we say use the buy rate, immediately cancel the right side. See, I have told you earlier also, buy and sell. Right side is always sell, left side is always buy. So here I'm buying it, so cancel this sell. Right side everything cancel. So your rate becomes what? Rate over here, interbank rate is 49.00. So bank rate equals to 49.00. Okay? So this is the spot rate, spot. But what about the forward? Where's the forward rate? I have given forward. Buy or sell, done. Forward rate. What about the forward rate? Who can tell me what is the forward rate over here? Which one will I take as a forward rate? Think, everyone think. Which one will I take as a forward rate over here? Yes? Which one? Forward rate. There is no forward rate over here. No forward. It's a spot transaction. Spot means there is no forward. Cancel this. Forward. There is no forward rate. Now TT margin. TT margin is there. 0.08. So margin equals to 0.08%. Right? Percent only into 49. So do this. Percent means divided by 100. So 0.08 upon 100 into 49. So get the answer, everyone. What is the answer you are getting? 0.08 upon 100 into 49. So point into what is this? 49. What are you getting? 0.08 upon 100 into 49. What are you getting? I am getting it as 0.0392. 0.0392. I am getting this. Now what do I do with this margin? Are you getting all this? 0.0392? Are all of you getting the same answer? 0.0392? Getting it? Then it's okay. So margin is 0.0392. Type yes in the comment section if you are getting it. Everyone, type yes. So now what will I do with this margin? Will I subtract or add? What am I doing? Buy. I am doing buy. Buy means margin is comment section. In the comment section, buy means margin is subtracted. So rate equals to final rate. Final rate equals to, what was it? 49. 49 minus 0.0392. Do this, take this. So 49 minus 0.0392. So 48.9608. Are you getting this? 48.9608. This is your final answer. Final. Okay. For the rate. See, this is for the rate only. Rate. Okay. This is for the rate. Kindly note this. This is for the rate only. Getting it? Final rate is this. But you have been asked two questions now. Which are the two questions? Second question is amount. What is the amount? Amount is simple now. For calculating the amount, just multiply it with this dollars, 2,50,000. Rate with dollars. So amount equals to amount. What is that? 2,50,000. Okay. So I'll just write it what? 2,50,000, 2.5 lakhs, right? So dollar 2.5 lakhs into, what is the rate? 48.9608. 48.9608 48.9608. Get the answer. 2.5 lakhs into 48.9608. Do it, everyone. What are you getting? Rupees 1 crore 22 lakhs 40,000 and 200. This much is the amount to be credited in the account of that customer. 1 crore 22 lakhs 40,200. This much amount will be credited in the account of that. Numerical on crystallization of overdue export bill. Crystallization of overdue export bill. Crystallization means converting the foreign liability to INR liability. Let me clarify that point first. What is crystallization? In crystallization, what do? We convert the forex liability into INR liability. Why do we convert it? Because that bill is overdue. What does RBI say? Pay attention. RBI says that whenever you have a forex liability, forex loan, and it becomes NPA, you can call it NPA, it becomes overdue. So in that case, convert this forex to INR, rupee liability. And this process is called as crystallization. Okay, this process is called as crystallization. This is always done for the NPA loans, NPA forex loans. Okay, NPA forex loans. That's known as converting the forex liability to INR. Okay. Now, what is this numerical? See, an exporter had an export bill of USD 10,000 discounted by the bank. So, discounted by the bank means what? Bank had given the finance. This was financed. This was financed by the bank. Okay. So, export bill of USD 10,000. Export means he had done some export few years back. Okay. A few months back, not years back. Few days back, you can call it. It's given. Everything is given over here. Few days back, he had done some export. And now this export was due for payment. It was due for payment. It was to be paid. But look at it. He had done an export. He had taken the finance from the bank. And now what? The due date for realization has passed. Now the payment was to be received, but it has not come. Okay, means the payment from the buyer has not come now. This should have been received by the bank, because what will bank do? Bank has given you the finance, customer, and now it has to get the money from the buyer in dollar on the due date, but it has not got it. And the bill is now overdue. So this is overdue now. Okay, the bill is overdue now. Now what is given? INR interest rate is given as 7.5%. INR interest rate is 7.5%. Penal interest rate is 9.5%. This is the rate of interest. For rupee loan is 7.5, and for this penal interest it is 9.5%. Now what are the details? Due date of that bill was 15th July. Okay, due date of the bill was 15th July. So on 15th July the buyer was to pay. 15th July the buyer was to pay. Okay. Date of crystallization is 5th August. So on 15th July the buyer was to pay. It has not paid. Buyer has not paid. So bank has to convert it to the rupee liability. So bank has converted it on 5th of August. Original bill buying rate is USD 1 INR, 1 USD equals to INR 80 on 1st July. So original bill buying rate on 1st July. It means, what do you mean by this 1st July date? Original bill buying rate on 1st July means the bill was financed on 1st July. At that time bank had purchased, bought. So bank had financed on 1st July. TT selling rate on 5th August. See, 5th August is which date? Crystallization. 5th August is INR equal USD 1 USD equals to INR 82. Okay. So the exporter will be liable to pay what amount? What is the amount the exporter should pay to the bank? Problem is not simple. First, have you understood the crystallization? Type yes in the comment section. If you have understood the concept of crystallization, forex liability to INR liability. Now I'll go further. How to convert this? What is the rate to be taken? Whenever you are converting any forex liability to INR liability, the rate to be taken is number one, higher of, see this, higher of original bill buying rate. So original buying rate, I'll write it, bill buying rate. Okay, or should I write it full? I'll write it full only here because it gets confused, these short forms. Bill buy and original bill buy on which date? 1st July, when it was purchased. So original bill buy or second is TT rate. TT selling date means on the crystallization date. TT selling on crystallization date, crystal date. So higher of these two, you have to take higher of these two. Okay, you have to take the higher of these two. Pay attention, very, very, very important terms. Okay, crystallization is always to be done when the liability, the payment is not made on the due date. At that time, the crystallization is to be done. There are rules for this. Okay, there are rules for this. RBI has given certain conditions. Those we'll discuss someday later. The crystallization rules for import bills are separate. Crystallization bills for export bill are separate. Crystallization rules for usance bill are separate. Crystallization rules for side bills are separate as per RBI. Those I'll discuss someday later in a single video because that requires a separate video. That is not, it can't be covered in any other videos. Okay, I'll do it separately, that session. Let's try tomorrow only. If tomorrow I can, means next any days. Okay, so next, so higher of original bill buying or TT selling, whichever is higher. Okay, now check this, which is higher, 80 and 82. So this is higher. So I'll be using the rate of 82 over here. Higher of original bill buying or TT selling. So I'll be using the rate of 82 over here. So now what is to be done but? What is the rate? What are the days? Rate is done. What about the days? See, the bill was purchased on 1st July. 01 July. The bill was purchased, means bank and financed. When was the due date? 15th, I think so. 15th July. Due date. Due. Okay. So this was finance. Finance was done on 1st July. 15th July was the due date, isn't it? 15th July. Where is it? Yeah, due date was 15th July. Crystallization is 5th of August, means payment is not received on 15th July. So here payment was to be received, but no, not received, payment not received. So now it is extending. And on 5th August, ultimately bank said that nothing doing, now convert this. So here crystallization is done, crystallization. So I have converted the entire liability to INR. I have converted the entire liability to INR. So now, what will I apply and what will the exporter pay me? See, what was the amount of the bill? 10,000. $10,000. Rate I have fixed now. Rate is 82. So I have to convert it at the rate of 82 now. Okay, forget all the rates now. 82. Now interest. up to due date, you should always charge the normal rate of interest. What is the INR rate of interest that you should charge? Okay. So what will you charge? Normal rate of interest, INR. What is the INR rate of interest? 7.5%. So you'll be charging here 7.5%. 7.5%. And for this remaining part, you will be charging 9.5% penal, isn't it? For this part, you will be charging 9.5 penal. Got it? Clear? This should be very clear in your concept, in your mind. Where do you charge regular? Where do you charge penal? Now calculate the number of days. Calculate the number of days. 1st July to 15th July. Okay, 15th July end. Due date, full date. So what is the number of days? 15 to 1st. So it is 15 days. 15 days. And here 5th August to 15 means 15 July to 5th August. So it is 25 and 5. July is of which, how many days? January, February, March, April, May, June, July. 31 days. So 31 days. So this will be 21 days, not 20 days. 31 days, 21 days. Why? Because July is of 31 days. Okay. So 21 days over here and 15 days over here. So what should that customer pay me now? That customer should pay me, see this, the exporter. Exporter will pay what? Exporter pays, what does he pay? First, principal. Principal is main, right? Principal plus normal interest. Interest plus penal interest. Right? These three things the customer will pay me, and if there are any charges, extra penal, any charges which I am charging, charges. But here no charges are given. In this numerical, if you see, there is no charge mentioned. Otherwise, they mentioned it in the numerical. Kindly charge this, as this fee, that fee, any fee. So charges. But here there are no charges. So this will be 0. Okay. Now calculate these three. Principal. What is the principal amount? P equals to, what is the amount? $10,000 into rate we have fixed just now, 82. So 82,000 rupees. 82,000 the customer will be paying me. 82,000, this is my principal amount. The customer will be paying me 82,000 as a principal amount. Now regular interest. Interest equals to normal interest. NI, I'll write it, normal interest. 82,000, see this principal what he has to pay, because after all I have financed him 82,000 INR. 82,000 into 7.5% into now days. This 7.5% is for 1 year. Pay attention. This 7.5% is per annum. This is per annum, TA. But am I charging him for per annum? No, I am charging him for only 15 days. So into 15 upon 365. 15 upon 365. This is what you need to understand. Calculation of simple interest. So, what are you getting? Try it everyone on the calci. Don't try it orally. Try it on the calci. So, 82,000. I'll also try it. 82,000 because I also don't have the answer. 82,000 into 7.5%. So see this 7.5% means 7.5 divided by 100. Divided by 100. You can mark this percent, you can remove it and mark this 100 over here. Remove this percentage. Okay, remove this percentage over here. Okay, so 7.5 upon 100. Got it? So into 7.5 into 15. Immediately first do all the numerator. 82,000 into 7.5 into 15 divided by, now do this, divided by 365 and 2 zeros, right? So you are getting it 252 rupees, 252 rupees, 253 you can take it, 252.7 it is. So 253. Okay. Now what about the penal? Penal interest is penal, PI. So that is equal to again the same amount, 82,000. 82,000 into 9.5, right? 9.5 upon 100 into 21 days now, 21 upon 365. Try this. 82,000 into 9.5 upon 100, because 9.5 is the penal interest, into 21 upon 365. Do it, everyone. So 82,000 into, what is this, 9.5 into 21 divided by 365 and 00. So the answer is 448. Are you getting this? 448, everyone? 448 point something. So leave that point. What is the final answer then? What should the customer pay me as a bank? I am the bank. Customer is the exporter. So what should the customer pay me? So customer should pay you now. Customer pays or exporter pays. Okay? Pays what? Total of all these. 82,000 plus, what is this? 253 plus this last one. What are you getting? Some mistake. Okay, 82,000, 82,000 plus 253 plus 448. What are you getting the answer? How much the customer should pay you? 82,701. 82,701. This much the customer will pay you on crystallization. This much the customer will pay you on crystallization. Okay? This is an important numerical for crystallization. This is an important numerical for crystallization. Crystallization is an important topic in exam. Every time it is asked, every exam of BFM, crystallization of exports will be asked to you. In this case study, if it comes, will be for 5 marks. Various elements will be asked over here. See, 1 mark for this, 1 mark for this, 1 for this. So 3 marks over here. Plus some this charges will be given to you. Something they will adjust it and make it 5 marks. But you have to understand the basic. What is the basic? The rate of interest to be applied is either, see, this part is very important, higher of original bill buying rate or TT selling rate on the crystallization date. Higher of bill buying rate when I purchase the bill, and whenever I am selling the bill, higher of these two. See, we are in business. Banking is a business. I can do the loss over here, right? Because customer has made an error. Who was to pay on the due date? Was I to pay on the due date? No, customer was to pay. His buyer was to pay. So buyer has not paid. Means whose mistake is it? Buyer has made the mistake. And if the rate, see this, suppose I'll tell you one hypothetical case. if this rate over here was, let's say, 70 rupees, if this rate was 70 rupees, then what rate will the bank apply? Will bank apply 5th August rate, that is 70 rupees? No, it had purchased at 80 rupees. I had purchased something at 80 rupees and now the rate is 70 rupees. So will I sell at 70 rupees? No. What will I do? My purchase price, higher of these two, whatever is my present rate and whatever was my original rate. After all, this is the same logic of normal business. You will always sell anything for higher than the rate which you had purchased, right? Or at least for the rate which you had purchased. Suppose if you buy a flat tomorrow and afterwards the rate of the flat goes down. So will you sell that flat at a lower rate? No. What do? You keep that flat. Let the original rate come and then no profit, no loss, you can sell it. So it's always higher of either the original bill buying rate or TT selling rate on the crystallization date, whichever is higher. This is the crux of the numerical. The most important part of the numerical is this, right? So the whole concept over here is this. If you understand this concept, higher of original bill buying rate or TT selling rate on the crystallization date, if you understand this concept, then the numerical will be easy. Okay, let it come in any form then. You must understand this concept. Okay, so these were the case studies. Now those who are following the case studies mini marathon over here, kindly follow our paid classes also. They are just now started, today only. Okay, don't miss the paid batches. See this, Power Packed Revision Batch. Just now, today only it is starting. There also we are covering various numericals, theories. I will give you the handouts. 90% of the paper comes from that handout. Okay, so you have to follow that. Those, ask any of your friends who were there earlier. Majority of the paper is from those handouts. Okay, so BFM Power Packed Revision Series. Now look at this cost. If you use the code Y432, kindly remember the code Y432. If you use the code Y432, you will get 81% discount plus 1% extra through the app. Download through the app. Okay, download the app, then purchase it. 82%. So don't miss this. Numericals, objective questions, case studies, all are covered. Here in some these mini marathons and marathons, we cover the numericals. There the important theory is also covered. Concept is very important. Concept is a king, kindly remember. So join it ASAP and use the code Y432. Okay? Time is very precious now.